weekly update that I give you guys. I'm going to try to get through this quickly. So let's see if we can do it. If you have any questions, just throw them in chat. So 2024, continuation of the bull run. I think it's going to be a bull year, and we've gotten it so far. Again, this is a historical, historical examples of different scenarios for election years. Just know that May usually is kind of weak. Will earnings be able to stop that from happening this year? We'll see. So one of the things I want you guys to know is, dividend stocks are starting to find a bid. We're getting a lot of good money shifting into dividend stocks, but they're still relatively cheap. And you can sit here and read this from Bank of America and, see SWK, MMM, Bank of America, CCI. They're just some of the dividend stocks that I'm in. And I still believe that they're going to continue to get a bid. So if you like dividend stocks, I would definitely allocate some funds for those plays. I showed you these two charts a couple times, and you can see they're still relatively cheap, and I think they're great values. And so, when I think the market is possibly setting up for pullbacks, I still look for value, right? I look for opportunity within certain sectors to find certain charts that I think are valuable. Okay. So value has had a 100% hit rate in recoveries, and they led in March. So, value should stay in the lead. You can read this over here. All value sectors outperformed and swept the top 5 spots. An ongoing recovery regime values statistical cheapness, institutional neglect, and accelerating profits should keep value in the lead. For me, Disney, XBC, UNH, these are just some that I'm currently in. DE is one that I'm trying to get into. You can go through Vanguard's value ETF and just put a lot of those on your watch list, right? Like, even if you don't want to play them, just find the good charts that you like, throw them on your watch list, and see if they enter into any TPS pattern, right? Any squeezes. Now, this is 5 raw inputs improved from last month, right? We've got EPS revisions, GDP forecasts, ISM, PMI, high yield credit spreads, right? So we got some good data that came in, but the CPI, the PPI, right? The inflation's actually going higher. So it's like, right? So right now when there's good, that also equates to bad, because we want, quote unquote, we're being told that we want inflation down to 2%. So what we have to do is we have to decide, hey, where are we in this phase of the recovery, of mid-cycle, late cycle? Where do you guys think we are? Do you guys think we're in phase 1, 2, 3, or 4? For me, I still think we're kind of coming into this phase 2 here out of this phase 1. That's just my opinion. Shoot, it doesn't matter. It doesn't mean anything. But that's how I'm playing the stock market. And you can come in here and you can see, all right, well, what performs and when? Phase 1, phase 2, phase 3, and phase 4. And so you can see that I've been saying value, 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 right? And they do extremely well. And I also said, hey, small caps, right? The indexes I'm buying today are XBI and IWM, and this was on 11/1 last year, right? So that first phase is where small caps do well, and I took partial profits on those at about 25% and about 45%. But what's happened is we've kind of extended out this phase because Powell keeps saying, "Hey, we're going to prolong cutting," right? So for me, I'm looking to add this back, but I'm just waiting for the proper uh, time. And what I mean by that is I think we're going to have how do I say this? I think we're going to have a moment where Powell's going to say, it looks like we'll be cutting soon or next month or something like that. I think, and again, this is kind of I haven't talked about this a lot, but I think this month he may start talking about quantitative easing and running off of the balance sheet and spending more money to inject liquidity. So that would be another sign of uh, when possibly to get into small caps again. Um, Now, this slide I left on here, all four of these, because I think they're all great. And what they're showing is that value is um, growth versus value, expensive on book value. I mean, on book value. So basically, what this is telling you is all of these indicators, right? Book price to book, EPS, price to sales, PE to growth, all of these are showing that they're expensive. Now, what I want you to understand is I don't see this in the go looking for value or go looking for charts. I just look for value overall, and I agree 100% with this because this is how I find valuable stocks. And I found a lot of really good companies that have great opportunity for us. There's a lot of alpha. So valuations dispersion remains historically high, and value versus growth valuations remains almost 2 standard deviations below the historical average, right? Which is very low, right? For you math gurus. So again, I know I've been pounding the table on this, and I will continue to do this. Value, 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 right? That's where I am looking and shifting money. Okay. Now, this slide is U.S. investor sentiment is this blue, the light blue line. It's at negative 1.8, right? This is the first time all year that we've actually had bears, right? So we've been bullish. We've been above zero the whole time. We're finally down here to 1.8. All it took was a 5% pullback, and now people are jumping ship. And maybe they're right in the short term. I don't know. The other thing that I want you to really pay attention to is this NAAIM exposure index, right? Like we were up here above 100, and now we're all the way back down here to 62.98. The question for me is, do we need another pullback into the 20s or 30s for this? Or is it going to hold like this one held? And the answer to that, in my opinion, is going to be earnings. I personally don't know if we're going to have enough Google earnings to do that or not. I am leaning more bearish, but I'm willing to do whatever. It doesn't matter to me. I don't care, bullish, bearish, but no matter what the market does in the next month, it's not going to change my plans for value plays. It will change plans for short-dated options and or swing plays, right? To get in some long or short for a few days. But that's all it'll change. Now, I told you guys I was set up perfectly for next week's rally, this was a slide from last week, and we nailed it, right? We nailed the bottom, and we bounced. And can anybody tell me why did we come up here to 510? We kept talking about 510 last week. We're like, hey, the easy money was made between 495 to 505. Why did we come up here to 510? Can anybody tell me that? So what's going to determine if we come up to 514 or come back down to 496? Art, there's a tab in here for that says mods, and if you reach out to them in mods, they should be able to help you. Yeah, yeah, it's good earnings, right? Microsoft and Google came out and said we crushed it, right? Meta said, hey, we suck again. We're going to spend money like crazy, and everybody's like, we're scared, and it came down, and then it was like, nah, just kidding, we're good. So it's going to be driven by earnings again this week. Now we do have a lot of data coming out this week with some economic events, so that could help sway the market as well. So what you have to ask yourself is, do you think Apple, Amazon, and these big dogs are going to have earnings good enough to continue this push, or aren't they? Or you can just sit on the sidelines. It's up to you. I personally, again, I could be completely wrong, and I would be happy to be wrong. I personally don't know if we're going to have enough Google type earnings to continue this push. I don't know. I'm leaning more bearish, but gladly be wrong. And so why did we bounce? Well, we saw oversold technical level, and then the reason we held the bounce was because of earnings reports, right? What a difference a week makes. So last Friday, how many of you guys were freaking out? And I was telling you guys, hey, remember the theme of the year? Learn to enjoy the pain, right? That's short-term pain can give you really nice long-term gains. So I'm still holding because I don't know if we're going to roll over and come back and test the lows and possibly break the lows. I'm still holding a lot of plays from last week, including some SPY, QQQ, including some of the semis that we got like AMD, SMCI, NVIDIA, including some of the plays that we played through like Google and Microsoft, UNH, and stuff like that, right? So what I'm going to do this week is I'm going to try to take some shorter term trades that allow me to build a little bit of what I call, a good cost basis. And with that cost basis, then I'll be able to say, hey, let's maybe we can swing some now. Now, earnings are my favorite time of the year, and one of the things I want you to keep in a what's the word I'm looking for here? Keep on notice, I guess is the best way to put it, is you always want to look at expectations. Tesla had horrible expectations. They were beat up, right? But they had a bad earnings report, but the price still went up. Meta had great expectations, a good report, plus an increase in spending, price goes down. Microsoft had a great expectation. It had great report, and price is back to where it was 2 days ago, literally. Like it hasn't gone anywhere. And Apple's got the companies with the highest operating cash flow the last 12 months. Well, Apple's number one, right? Well, what did Google do? Google had an incredible earnings report. They beat. They announced on a $70 billion buyback. They announced a dividend. They got net income plus 57% year over year, record income of $23.7 billion, and margins went up from 25 to 32, right? And they've got the best cash, less total debt that there is out there. Like this company, I've been telling you guys, I'm loaded. And this is why they finally blew out reports and they did well. So guess what I'm going to do today? I'm actually going to dip buy Google. So Google is actually coming down while the market is going up, right? Not a good sign. It's divergence to the negative side, right? Well, for me, I'm looking at it as an opportunity to try to buy some Google today. So, we'll see. Now, another thing that I've been beaten for, you guys know, forever, and if anybody's in the trade with me, you're as frustrated as I am with some of these things, but I think China stocks are starting to bottom. I told you guys this. I said I think we're on that last little kind of fake out down, and we're going to start a run where nobody's going to believe it. And we'll see if it continues. I don't know, but Hong Kong stocks surged by most in 3 weeks, and there's been a lot of headlines that I haven't seen about good news on China. And so maybe we are finally starting to bottom out and push. And my plays are Baba, and I got a little bit of K-Web and a little bit of JD. Those are my main plays for China. Um, this was a slide for last week, and we want to see these S&P companies start to, you know, show earnings that are equivalent to the Magnificent Seven, right? So let's see if we continue that. And for last week, I think we did. I think we're looking good so far, and we'll see if we continue that this week. We've got a lot of good companies reporting this week. We'll see. One of the things I do want to raise caution about is, you know, if we want to keep a track on GDP changes. Is GDP going to come in strong? Are we going to start seeing effects of the tightening, right? So keep a track on this, because if it starts showing weakness, then we could get some weaker earnings reports, right? So this is kind of a, hey, let's watch it. Now I'm going to run through just a few charts real quick. Yeah, Baidu, you could play Baidu as well. I think Baidu would be fine. So PayPal is a long-term stock that I'm in. It's breaking out of this weekly downtrend, and it is in a weekly squeeze. I've been playing this one, buying and selling and adding to. And if this gives me another opportunity to add, I will. So Costco may be my favorite TPS chart, right? I mean, this is just beautiful. Looks great on a daily. So, you know, I'm willing to play Costco as a daily TPS pattern. SWK is another weekly that I have. And I actually got into it last week, but this is a weekly squeeze that it's in, and this is a long-term play that I am holding. Another long-term play is Baba. You see how we're starting to get this breakout? Or we're starting to test this breakout range. So let's see if we can actually do that this week. UNH is another one that we got in. You know, I was like, hey, this is one that's beaten down, blah, 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 blah. It's creating a nice little flag pattern with really a nice pocket of air above it for a possible push up into the 500 to 520 ranges. Google, I already talked to you guys about. It had killer earnings, and I am looking to buy this back. If we can get over this 171.86 to 172 line, I will be adding on dips, right? So like we're above that resistance, and so I'll be adding on dips. And there's quite a few charts that I like ESAB. It has a 195 TTM. And so there's a lot of good charts out there if you want to take some shots. Just know we are playing in the middle of a very volatile week with earnings and POW and data. So just know that. Now, one of the things I wanted you to understand is I told you guys AMD, right? AMD, I love AMD at these levels. I don't know why my computer's running so slow, but why is this running so slow? I was absorbing AMD from 165 right down to 150, right? That was my absorption range. Let me explain to you guys how I absorb things, right? So this was all done through just straight up buying shares and selling to open puts to get the shares taken to me. And it basically came out like this: 5K at 163, 158, 155, 150, and 147, right? That's basically my cost basis. And so last week, as it was bouncing, I was able to sell 5K for about 10 plus, right? I was able to sell another 5K for about $7 plus, and I was able to sell some sold to open calls and gather about $4 on premium, right? So I was able to get about $21 and got rid of 10K shares, right? So even though my original cost basis is 155, 158, and 163 on these, right, which ultimately gives me a cost basis around that 158 level, I've already taken in $21 of profits on 10K shares. So what does that do to the cost basis of these 5K shares that were bought at all three of these levels? Well, what I'm trying to do here is I'm trying to lower that cost basis as close to 150 as possible. And so now we're close to being down there, right? Now I will be selling some more as we come up into this 160, 162 range through selling to open calls against my shares. Does that make sense? And so whenever I'm absorbing, that's what I am doing. Okay? All right, so my goodness. Does anybody ever, and I apologize if this offends anyone, my dog just ripped one. What is it with dog gas? Like, it's the worst in the world. Like, I mean, you freaking clear out a room. Jeez. I gotta open this door. Give me one sec, guys. Woo. Which one of you is that, huh? Oh, goodness gracious. Okay. All right, so let's get set up for the market open.